Hey, good morning everyone and happy Friday. Welcome to the PivotBoss Pre-Market Report for May 12th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. The previous session we had quite a drop after failing to hold the 88.75s. This is what we've been talking about all week. As soon as we fail to hold 23.88.75, we'd likely see a move of about 10 to 12 handles down into 76.5 to 77.5, and that's about the spot where we were talking about looking for a defense and perhaps another push higher. Until 76.5 gives way, we're not going to see a move back across the range. So every attempt into this level is going to be defended by bulls. And price got very, very close to that area, getting a low of 23.79. So did not quite get into the 77, 76 half zone, but it did test the previous month's close price. And that is where the trap occurred. And by the end of the day, price had pushed quite a bit higher, rallying back toward about 23.94s. Not bad. 23.93s. So not a bad recovery overall. What you see right now is price holding right back toward the midpoint of the previous session's range. We're also seeing any push below that range right now being defended at the moment. There is a potential to see a retest down into this area, but overall, bulls are still defending. This has been a very bullish market. Price continues to hold near the overall highs. Again, as I mentioned before, if price can find acceptance beyond 2400, the next upside targets, as I keep mentioning, 24.24 quarter, 24.59.75. Those are the next upside targets based off of a pullback. Now, if you take that measurement high from 2403s down to the recent 23.79s, that's quite a pullback compared to what we've seen here recently, and that is all that the bulls need in order to try and push this thing higher. So overall, bulls still defending and very, very active off the previous month's close, and the expectation would be for more strength at some point ahead. But once we get into this range right here, it has been a sticky area, so there could be a little more chop before we see that burst higher. All right, let's take a look here at the intraday time frame. Dropping this down to the intraday, you'll see right here the previous session again, a significant decline. If we, the previous session, well, for the standards of the current rally, if we make this the monthly targets here, the monthly pivots for PivotBoss pivots, here's the sell-off that we saw. There's the push into the previous month's close, and it's also the FOMC key level from March 3rd. Or rather, that's May 3rd. When price bounces, it comes back below that previous month's close, double bottom on the 23.79s, price pushes back above, and this is where the absorption occurs. That's a quick move back to value, and it's stuck at value. What I mentioned to our trading room, in order for this thing to get higher, price really needs to go bid hard through value. That's VWAP, and price did. And once that happened, it was a slow march back toward 93s. So not a bad move, but again, the trap occurred off the previous month's close. Now you see here 23.84 becoming support, and that's where bulls are currently trapping. So that's an area of support. You can see the volume ledge on a 5-day profile. So any retest of 84s here, any failure to get below that zone could offer an opportunity to squeeze this thing back toward 23.90.5 and perhaps even push it back to 5-day value, which is 94.75. All right, let's take a look at crude oil. Well, there's crude oil. Now, if we bring it up here, you can see very tightly coiled range here on the intraday, but on a higher time frame basis, we've had quite a significant reversal. We've been targeting the 48.75 as a first level target to the upside, and it's been a nice move here, especially over the last couple of days. We had the significant rejection last Friday, a week ago today. And the day before was a sell-off day, significant sell-off day, and then a big rejection day on Friday, heading into RTH. That told us to look to defend pullbacks into the mid to low 45s, and that was going to be an opportunity to absorb for a shot at squeezing this thing back to 48.75s and get as high as 50.20, but no higher at this time. So we've seen quite a move so far off that analysis. And overall, this level right here, 46.90 to 46.89, that zone right there, offers a high probability opportunity for bulls to defend and further squeeze. So we could see more of a pullback and still remain bullish as long as 46.90, 46.80s remain bid. Now, one last thing, we've been in an uptrend, and sometimes in order to squeeze, we need to see a test of the previous low and reject it. Very similar to here. This is what we talked about just earlier this week. If price gets below that low, look to trap and squeeze, and that's what's happened here. So the previous session's low is going to be 47.34. So any breach of 47.34 and a failure to hold that level would be an opportunity again to squeeze and complete that move into 48.75. Now if we take a look here at the intraday time frame, there it is again, very tightly coiled price action over the last couple of days after the significant rally we've seen. You can see that after the rally, we've set out a pretty good range. This is the nice impulse move here. That sets the edges for the current trading range. And again, it's just below this area. Here's 47.34. That's the previous session's low. This is the intraday pivot low, which is about 47.54, 53. So again, if price were to push below that zone, anywhere below 47.50 or perhaps as low as 47.34, this is an area to trap and look to squeeze on a swing basis up toward 48.75. All right, let's take a look here at gold futures. Here's a look at gold. If you take a look at gold here, what you'll notice is, again, we've been in quite a bearish downtrending move, and we really haven't recaptured any strength here at all. The one thing that we did see was price push above the previous high, but did not go offered. It held, it pulled back to value, and then at VWAP, then from VWAP went back toward highs. And right now we're seeing higher highs and higher lows day over day over the last 2 days. But I mentioned before, price really needs to establish itself back above 32s. And any push into 1230 to 32 could still be an opportunity for bears to defend and drop this thing lower. So right now, tentatively, this thing is pushing quietly higher. But overall, this is an area where bears are really going to want to trap in order to push this thing down into 1200 to 1205. So still an iffy zone here. Price really needs to get above 1232 if bulls are going to try to reclaim prices back toward 1250. On an intraday basis, here it is right here. We'll bring that up. So on the intraday basis, again, the previous session had a push into and beyond the previous session's high, failed back to value back to that zone, and that was the move yesterday we were talking about in the trading room. And from there, we've seen price continue higher, and you can see a short-term trend up at the moment. So not bad overall for gold bulls on a short-term basis. But again, 1230 to 1232 is the big zone up here. And if price cannot establish above there, we could be looking at a quick retest of 1221 followed by a continuation to new lows. Lastly, let's look at ZB here. ZB has been trending lower, and overall, again, in a unidirectional trending market, so this thing's been pushing lower. You want to look for failed new highs. That oftentimes is a big signal of new lows. That's what we saw earlier this week when price pushed above the previous high and then sold off and closed below it. Again, Wednesday, another failure of the high, pushed down to new lows. Right now, we're seeing the same thing occur again. So here's the previous high. We're just above it. And at the moment, we're seeing a push back below that high. So in a downtrending market, one of the easiest trades is looking for failed new highs, right? All of those failed new highs in a downtrending market are money for new lows most often. It works until it stops working, and that's when the trend breaks. So right now, we've been trending downward. The next key level below is 149.24. That's the same level we talked about when prices failed to hold up here and started to drop. We mentioned that any pullback into 153.21 could be an opportunity to swing it down toward 149.24. We're getting very, very close to that composite VPOC target right now, and we could be looking at that target over the next day or two. If we look at the intraday time frame right now for ZB, again, a previous high failure is always very important. That's the previous session's high. We see a higher high failure and then a push downward. So again, that's going to be the zone to watch here. Any pullback and a failure to get above 150.29s or above VWAP could be an opportunity to at least push it short term into 150.13 on a short-term basis. All right, that's it for now. Let's see how this thing plays out the rest of the session. Good luck, trade well, and happy Friday.